if we used to go one-on-one and then add 66 and 2/3%, I got 141 and 2/3 chance of winning at sacrifice. See, Joe, the numbers don't lie.
So just yesterday on the channel, we covered that Boom Studios was bringing Magic the Gathering into the fold as far as a licensing deal, and they finally had a license with Hasbro. We think that there's a good potential that Transformers, G.I. Joe, and some of those other Hasbro licenses will move over to Boom or maybe somewhere else in the future. IDW has not been doing all that well, and we talked a little bit about our expectations regarding IDW's fourth quarter statements. Little did I know they would be out a few hours later, and here to talk with me about that again is El Perch himself, the Pooh Comics. How you doing, Perch?
I'm doing great. Yeah, thanks for having me on.
So it's pretty interesting. A lot of the things that we covered within this, or that we covered on the channel as far as our discussion, they go over directly in the financial statement, kind of corresponds with what we were saying. But there's some interesting details I definitely want to talk to you about. So apparently, IDW Publishing, the publishing division within IDW Media, obviously they do the comic books, they had their highest revenue total in 4 years as far as quarterly profits or quarterly revenue. I think it was $7.7 million. It turned into almost $500,000 of income. So, so they made money. They turned a profit. That was good. And that was led mostly, it was led mostly by late Congressman John Lewis's March trilogy and George Takei's They Called Us Enemy graphic novels, not traditional comic books.
Which makes sense. Those books were distributed outside of comic shops. And I mean, it's like we've talked about before, it's all about distribution. So they were able to get some books out there in places that were outside of a comic shop, increase the distribution, and that helped. And I think it hooked on to the moments, obviously with John Lewis's passing, but also just the general election and everything else. It fit what they did.
It also goes right in line with the trends that we're seeing just within comic books in general, that maybe graphic novels that are in the book market chain have more viability as far as garnering large amounts of profits than your traditional comic books. Interesting enough, they did not mention TMNT The Last Ronin, but I'm assuming that's because it was released on October 28th. The fiscal quarter would have ended on the last day of October, and maybe they hadn't got their payoff from Diamond yet.
Yeah, it's possible. I'm surprised they didn't put initial orders. They would have had some insight into that revenue, and I think it would have been, I mean, in the interest of transparency, I think you kind of need to, if you can forecast revenue coming, if you believe something's coming in the quarter. Now they may have pinned it later, but that is a little unusual. I mean, strictly speaking, if they hadn't got their money from Diamond, they could, but in terms of what you do for investors, you have to disclose if there's an event that's happening within your company. And it isn't listed anywhere here, which is curious.
Yeah, I was surprised about that because it seems like that would have been a big success. Like it was well over 100,000. It was an expensive comic book, and it wasn't like it was a large page count for an $8 comic. So I imagine they turned some profit on that one.
Yes, I would expect they did. Yeah, despite the issues with it.
A couple of other things that they mentioned just as far as the publishing division financial performance. Book market revenue increased substantially, augmented by sales of digital comic offerings and license and royalty revenues. I really wish we could see these digital comic sales numbers, like some actual details on them, because it's always so general.
It is. It definitely is. And I think that's to some extent intentional. Digital is not significant, and I think there's still a desire, especially for companies like this one that has some public activity, where they want to portray that digital is growing and a healthy part of their business. But we do know that digital is very flat and stagnant. We know this from Amazon, who has leaked enough of this. It's not growing. And any kind of business that you have public investment in, you need to show an upward trend, or at least some outlook that's going to suggest that money's going to grow. You don't show something that's flat.
And then one of the things that we've heard from retailers is that to survive the pandemic, back issues turned out to be, basically a godsend, that they were able to help augment the business. And this is what IDW had to say: increased revenue, including sales of higher margin backlist titles. Do you think that's actually graphic novels, or is that like reorders of old comic books that they'd already paid for?
Probably a little bit of both. I would guess that they did have some things they were able to collect, and I'm sure that helped. But I would suspect there's some issues in there as well. I think it's all probably dumped in.
Okay, so that's kind of the highlights there. And going along with what we talked about yesterday on the channel, we said, listen, IDW Publishing could record record profits. Obviously, they didn't record record. It was the largest revenue that they've had in 4 years for a quarter. But even with that, for the year, they lost $100,000, which isn't very much. That's pretty good, especially in comparison to 2019 when they lost $5.2 million. But even with a pretty decent performance out of IDW Publishing, IDW Media still lost $2.2 million in the fourth quarter and $13.8 million overall in 2020, which is substantially less than 2019. But it sounds like it's mostly because they are producing less content for streaming and traditional like cable networks. This is what they had to say. IDW Entertainment substantially narrowed its loss from operations in fourth quarter. The loss reflected Wynonna Earp related expenses, the write-down of a Dirk Gently-related asset. The loss in the year ago quarter, which was substantially larger, reflected deliveries of V-Wars and October Faction episodes and an earlier asset write-down. So they're producing less content, so there's less losses from the entertainment division.
Yeah, sure. I mean, the entertainment divisions of everybody in 2020 actually reduced because they weren't able to produce content in some cases. Not even, I mean, many were producing less, but they also are not able to produce at all in some cases with the COVID restrictions and other things. So it's not surprising. I mean, they did a pretty heavy layoff, of course, and they shed a lot of expenses during last year. And combined with that, they filmed less, they did less, and they were forced to not film much. So, it'd be kind of surprising if, they didn't have this kind of drop. They still lost money, which indicates, it's not going to continue a downward trend in this year. We're going to see those costs bump back up again as we start to film more things. So, that's not going to change.
Certainly, they're spinning it to their benefits. Hey, look, we're more viable. We're losing less money, and we're actually having record revenues for our publishing division, which are kind of a fraction of their overall media, like entertainment division. So one good piece of news, Locke Key did get picked up for a third season on Netflix. Obviously, there's only been one season. I believe it was greenlit for season 2 after an issue or 2 on Netflix, but they've already greenlit a season 3. That's got to be good news for IDW Entertainment moving forward.
Yeah, absolutely. And I mean, that's a show that's got some health in the market. And I think it's, people clearly have an interest in it. It was done well. It was a fine series. And
then, interesting enough, they also they are still reporting losses from CTM. That's like their tourism brochure division that didn't really make sense. Just thinking about what IDW is, that was supposed to be sold off to the primary stockholder. He's also, I believe, the president right now.
Right.
But apparently they can't sell it because of PPP loans that they had. I guess they have to wait a certain amount of time before they can actually move the asset over to him. So they're still taking on losses.
Right. And I think that was, I believe that was mentioned before, that they did, because they got the PPP loans, it basically extends out, I believe, 6 months, or maybe it's 9 months. So this is going to trail into next year.
Mm-hmm. And then the last thing, we obviously mentioned yesterday that, hey, the next time we see these statements, we're expecting them to be debt-free.
Yeah.
Guess what? We were correct. Last year, they had $10.5 million worth of bank loan obligations. Now they have 0 bank loan obligations on the books. They're not completely debt-free, but the ones for banks are completely wiped off the books. Good bookkeeping. And this is another thing that they mentioned as a highlight. We're in the process of re-registering IDW's Class B common stock with the Securities and Exchange Commission, and are working to get that done in the first half of the calendar year. And then we'll work to get the stock listed as on the national exchange.
Yeah,
I'm assuming that's an outcome of having better looking books.
Well, yeah, I mean, you're working to pay down your debt. I mean, obviously they did not pay down their debt with revenue; they paid down their debt with loans and other things. So I mean, the debt just shifts. It's not like it's not like they made so much money they were pay off their debt. Hooray! It was a restructuring that basically went on. So I think that does position them to get listed on. Now, the key here is on a national exchange. And most likely that's not the U.S. I would be a little surprised if it would be. I think the bar is still probably pretty high for them to be listed on the U.S. national exchange, but could be. There are many other, there are many other places to get listed with your stock. And most likely the firms or the people who are helping them restructure their debt and pay that down that's part of the contingency of doing that. Typically, if you're going to go public, say on the Nikkei in Japan, you get a firm, they help you pay down your debt, and then you get listed there. And that's all part of the arrangement of working with a bank and or whoever's helping you in that process. So I suspect, if you could find out who is helping them through this, that's going to tell you where they're going to be listed.
So it was an interesting financial report. We kind of forecasted it on accident, the day before, like, hey, we're looking for these things to happen. They pretty much did happen. But just looking at IDW Publishing, obviously, they had record revenue in a quarter for the last 4 years, primarily because of 4 graphic novels, the George Takei novel. Should they be looking more into like prominent, U.S. figures to be creating more of these graphic novels? It feels like maybe that's more of a, more stable long-term investment for the future of the company.
Well, they should definitely be looking outside the comic shop. I mean, they've got their comics and they continue that business fine. But if they did have some inroads with John Lewis and some of these other graphic novels outside of shops, if they're getting inroads to other distribution sources, they should absolutely do more of that, because that's where all the different companies are struggling, and that's where a Boom or some of the people chasing them will have more trouble. It's often hard to get those deals. And so IDW should leverage whatever deal they have with Netflix or that relationship. They should leverage whatever licensed properties they have, and they should basically be going after these other distribution sources and say, look, we have content. We are a proven player in this market. Let's start building out comics in other places besides shops. Stick with shops. I mean, obviously, you still need to support them and put comics there and everything else, but their growth is going to come outside, which is a true statement for everyone in comics right now.
Now, I'm expecting that their first quarter, financial reports for IDW Publishing to be pretty positive as well. We didn't hear about TMNT The Last Ronin. I imagine we'll get those numbers in there. Hopefully, maybe they'll have another graphic novel or something in there. I feel like this is probably good news, at least for IDW Publishing. I don't know about the long-term viability of IDW Media, but if they need to go and start selling things off, it's good that it looks like it's not just losing money every quarter. Maybe it's starting to generate some revenues and maybe making inroads to new distribution.
Yeah, I mean, maybe I think if they can get some of these other distribution places in line, they can manage their costs. I think it wouldn't hurt to kind of settle once and for all what they're going to do from an entertainment business. Are they going to produce more or do more what they do with Locke Key and share the expenses but get less? Just fix yourself into your business. I think that would be smart for them to do. And just kind of settle who you are as a company. They're involved in a lot of different things, and that's distracting. Getting CTM out of the picture helps. I think any extraneous stuff like that is more complicated. So making it very simple, very straightforward. This is our business. It's easy to understand. These are the places we play, and this is where we make our money. That would be smart for them, and I hope that they can do that. I'd like to see the company certainly continue and be strong. I do, like you, I expect next quarter to be strong, and then I expect things to drop back down again in Q2, Q3, and Q4 of next year. I think it'll be hard for them not to. And even the TMNT sales with Last Ronin are going to be good. But what's interesting is I'll bet you if you look at the revenue and you look at what's done, even the sales of that comic and what they did there is going to be a fraction of what they got for the John Lewis March trilogy. Just again, by nature of distribution, even something that's a smash hit, it's not going to be the same as what they're getting in some of these other places.
Absolutely. They're not making as much revenue just on a single unit sold anyway. They're making a lot more on the graphic novels. So
right. That's right.
Probably a smart direction for them moving forward. So, hey, it's not all doom and gloom. I think, IDW Publishing seems to be getting their act straight, maybe proving the long-term viability. They are a brand name. They're a player in comic books. And I hopefully moving forward, and we shall see. But it was interesting seeing a lot of the things that we kind of prognosticated the day before pretty much come to fruition.
Right. It's nice. It's nice when we have it.
All right, Perch, I do appreciate your perspective coming on here and just kind of re-hitting this up since we just talked about it. But it was fresh off the presses, and I figure we should go and hit it up again.
Yeah, absolutely. It was always a pleasure talking to you, and we'll see where we go from here.
If you enjoyed this video, please give it a like. I would appreciate it very much. It helps us attract more views for the channel. Subscribe for future commentary, comic book news, and reviews. And don't forget to ring the bell for notifications. If you want to talk comics, movies, and much, much more, you can follow me on Twitter at Wes_from_TC. With that, Salamat Po, and I'm out.